Hello, everyone, and welcome to the Catch the Turn nightly webinar. We are going to cover just a few markets, go over a couple of currency pairs, and see what happened today. So let's start with some pretty important news. The president announced that he is replacing Ben Bernanke with Janet Yellen, and that did have somewhat of a positive effect on the market, mainly because we now know that most likely the quantitative easing will not be discontinued. Interest rates should not start rising anytime soon as well. So that's another thing to keep in mind. She is not going to drastically change what Bernanke is doing. And the reason being mainly is because the effect that low rates are having, although there's the negative side of it where we can look at the amount of money that's being printed, devaluing the currency on one hand, but on the other hand, the low interest rate is allowing a lot of people who would not be able to qualify for home loans, more purchasing power. It also allows more jobs to be created because rates are lower, so borrowing money is cheaper to expand businesses. So those are some of the factors on the pro side as well as the con as far as having Ms. Yellen replace Ben Bernanke as the Fed chairman. I also believe she is the first woman to ever serve as a Fed chairman. So it's pretty important all around, and it's something to take note of. So that being said, got that news out of the way. I just wanted to briefly cover that. Let's take a quick look at some of the pairs that have been moving that we've been focused on. Euro USD, let's start with this one. It is currently in a downtrend. You can see we have a 60-minute chart of the Euro USD. And what we have here, you can see these are raw candles. So we have a couple different type of charts that we use at Catch the Turn. One of them is this chart here, where you'll see these candles. And this is what Vladimir, he likes to trade in the chat room in the mornings, our trading room. He uses these to identify potential trade entries. But for the purpose of going over the analysis, I'm just going to go over using raw candles, and the reason being is these are Heikin-Ashi smooth, and they're actually double or triple smooth candles. So they're excellent at showing trends, but they don't reflect current pricing, and they don't show all the highs and lows that we want to look at. But it is great when you're in a trade to keep you in the trade longer. It keeps you from getting chalked out of trades. Many times people tend to jump out of a trade when they're using a regular chart. So I just wanted to put it side by side so you can see the difference here. And I'll just put the 60-minute right here, and you can kind of see how that looks. So this is the raw candle. This is our CTT candles that we use, and it's a specially coded version of like a Heikin-Ashi smooth, but it's actually two indicators in one on the candle being plotted at the same time. So it measures a couple of different things. That's why you'll see blue and yellow coloring on this candle, and then you'll see green and red coloring on this candle. So we have a specific way that we use these to enter trades, and there's an interesting probability with these type of candles. Anytime you have candles like this, there is, I think it's over 90% that the first candle that closes, the second candle will close in the same direction. Okay, so that doesn't mean that every single candle after that is 90% that it's going to keep going down, but what it is based on the way this is calculated or measured. I believe it is about 90% chance that the next candle will close in the same direction as the first candle. Okay, so at the very least, you're going to get 2 to 3 candle move in price. And so this is how just one little feature that we use to identify possible trade entries and setups. Okay, so that being said, let me get this chart back over here so I can jump right back on this. So what I want to go over is just the movement that we had today. As you can see, we are going on to the 10th, and what happened today was we pretty much had the Euro USD in a nice downtrend. There was a few hours that we did get a pullback about 9 a.m. during the U.S. session. The Euro did kind of bounce back, and then it sold off again. So there wasn't a lot of news other than the Fed chairman being named that was moving the markets, but the euro still managed to continue dropping. It dropped all the way from 35, it looks like around 35.70s last night, to a low of 134.90. So that's a very almost 100 pip move. Very good move. If you were able to catch any of this, as you can see, our Cobra indicator, which is this red and yellow line here, identified the short entry at approximately yesterday around 9 p.m. it looks like, and 8 or 9 p.m. And so from there it's been short. Now if you didn't get in there, what you can always do, and we teach this in our, when we have people who sign up to use the platform, subscribe or purchase it, we'll teach you how to find other entries to get into this. And it includes using multiple time frames, smaller time frame charts, as well as identifying specific price patterns that will help you get into these so that you don't miss the entire move. So in this case, it paid very nicely on this swing down. You were able to take profit here, and then because our other indicators are showing a downtrend, it's not something that I would take this long signal, even though technically our trend indicator here reversed and gave us a long signal. Because of the momentum to the downside, I would probably have ignored this long. Now, that being said, if you are a counter trend trader, you're advanced, it's an advanced strategy, and you're a competent trader, you're comfortable doing that, you're more than welcome to take a counter trend trade. Just remember your stops are going to be tighter and your profit targets are probably going to be less. And as you can see, sure enough, it did pay. This did move from a high of 135.18 on the first candle signal up to 135.28. So not much more than 10 pips available there. If you were even able to catch that, you may have ended up getting out break even if the trade didn't continue up. In this case, it rolled back over. Our trend indicator, our Cobra trend, did reverse back to the downside, letting us know that, hey, this up move is just a temporary pullback in a downtrend. Okay, so that's the best way to describe this. And what you would do to look here is if you miss this first trade, you see this long coming in, it's what we would call a breath in price. You would wait for that next confirmation to go short again. And you could have entered at anywhere from 35.09 or up to 35.19 about. And your stop would be at the highs at 35.28 on this swing down. So in this case, price never came back to test your stop loss, so you'd still be in the trade. And it did get as low as 34.90, 91.90, around there. So if you're still holding this, you'd be sitting in the trade right now, sitting pretty good. And just wait and see what happens. In the European session will be opening in the next couple hours, and so we'll keep an eye on that. But we will be in the trading room. If you guys haven't been to our Forex trading room, we've been having a great couple weeks. I believe yesterday total they closed out was around 20 to 30 pips for the morning, so it was a pretty good day. And definitely recommend take a trial of the platform. Come into the room. You have access to the trading room. You can watch Vlad or myself take trades in the room, and if you have any questions, we're happy to answer them. The next market I wanted to take a quick look at is the, where is it? The USD yen. Okay, so here you can see that the dollar yen has put in a bottom about 96.50s, and it hasn't been able to take out those lows. And what we know is the dollar isn't necessarily strengthening per se, but the yen isn't doing anything either. It's kind of weakening in most respects, so that's why we've seen this kind of reversal. The U.S. economy is still, the government is still shut down, so really from a fundamental standpoint, there isn't really any reason why dollar should be strengthening. If anything, it should be weakening. Yet we spent the entire day moving higher. So that tells you that either the yen's really, really bad, or things just aren't as bad as it seems here in the States, or as we perceive them to be. So it is pretty serious. The debt is definitely an issue, and the government shutdown is an issue. And those are things that will have to be addressed. But in the meantime, we just followed price and our indicators. And so we had a nice setup here to go long today at approximately 11 a.m. And it's been long ever since. And you did get a spike up here, a pullback. You got a pullback to our Cobra indicator, and it continued higher. So you have plenty of opportunities to take this trade long anywhere in the 97 area. And as you can see, we're sitting at 97.70s. So about a 50 pip move from anywhere in here, 40 to 50 pip move in just the last few hours. So that's something definitely worth looking at. Let me switch to a 15-minute chart so you guys can take a different look from a different perspective here. And well, that's not supposed to look like that. I'm just going to remove our ocean indicator. It's not really necessary. I just want to show you guys the 15-minute. So you can see here that there was a brief move lower. Price could not take out these lows, and then we had a new structure in place. We had a new high coming in here. We came back. We had a higher low. Okay, so we were unable to take out the prior lows, and your signal would have been right here to go long. If you missed this first entry here, that's fine, because you weren't sure. This might just be a reversal, and then price could continue lower. We weren't sure at this point. But after we put in this spike and price came back and could not retest these lows, that's a pretty clear indication that prices will be moving higher. Okay, if you combine that with our other indicators, which I do not have up here right now, like our market force, high and low, and CTT pulse indicator, you will have seen there's probably divergence here, and that is another confirmation to enter the trade long, as well as our trend, our COBRA trend indicator, which really the idea of the COBRA indicator is to not only give you the signal to go long or short, but also keep you in the right direction of the trend. So as you can see here, we had a brief selling candle, selling price action coming here. We were unable to take out or create new lows beyond this point here at 97.25. The next candle was a not quite an engulfing candle, bullish engulfing, but it was a bullish candle that almost basically was equal in size to this selling candle here. And then we came on the very next candle, we started getting our confirmation to go long. Okay, so the COBRA indicator would have confirmed long right about here, and price pulled back. You can either take the aggressive entries to take at the close of this bar. I definitely recommend getting in on a pullback to COBRA. And then your stop is obviously at the swing low. So 25 to 37, we're talking 10 to 12 pip stop on this move on a 15-minute chart. Very, very good risk to reward here. And in this case, boom, we just took off, never came back and took out our stops. So if you took some profit out here, that's great. If you would, had taken this signal and you held the trade like some of our clients did, you are now sitting very pretty up at 97.70s. I myself closed out my trade early, and I missed an opportunity to get back in around 50s. So that was my mistake, but as you can see, the indicator was very clear. We had a small pullback. COBRA let us know that prices were taking a breath, and sure enough, the next candle came in, closed above, gave us a long signal again to go back long. And the way we take these is based on the trend direction. So this is a trending system. We look for COBRA to confirm the direction of the trend to re-enter a trade. I don't recommend taking counter trend trades. I don't like them personally, but it is an advanced entry method to do counter trend trading. So if you know how to do it and you're comfortable with the risk parameters, then by all means you can use the counter trend signals here to take shorts. And many of them, as you can see, they do pay. They do pay pretty well. But that is not our main strategy, and that's not how we teach, especially newer traders, to trade. So I just do want to mention that I am aware, because a lot of people will see these swings and they'll say, hey, why don't you take these short? These look like great short opportunities. Well, we're in an uptrend, so we're going to go with the flow. We're going to go with the momentum of the market. Trending is just overall easier for newer traders, as well as more higher probability of success for every trader than trying to catch tops and bottoms. Okay, so we do teach other strategies for picking tops and bottoms with our position trading strategy, but that is not covered here tonight, and that's a completely different set of rules. But again, that's the USD yen market today and the Euro USD. Let's see, one other market, the Euro yen, was one that was kind of ranged out today. Didn't have huge swings. Right now we have this almost like a cut pattern forming here, as you can see. And we did have a nice move lower. Price then throughout the rest of the session kind of range consolidated lower, and then all of a sudden reversed higher, as we saw also on the dollar yen. And sure enough, it just kind of tested, could not take out the prior lows down here, and moved higher. So, but again, we're only talking from 70s to 94. So this was a much smaller magnitude than the dollar yen. And there are days where you're gonna want to not trade every single pair that moves the same direction. We know the euro yen tends to move a similar direction as some of the other yen pairs. but as you can see, the magnitude was much less, so you would have had to work a lot harder to get your pips out of this pair than you did using the dollar-yen. Okay, so that's just a few points to bring up. The Asia session is relatively quiet. We are now waiting for the European session to open tonight, but if you guys don't have any questions, I'm going to go ahead and call it a night. I just wanted to go over the market briefly with you guys, and definitely look forward. Contact us at info@catchtheturn.com if you'd like to request a trial of the platform. We also have a fully automated version of the strategy called the Alpha Trading Strategy, and it will trade multiple charts at once, and all you have to do is manage the trade. It will take the entries based on our core indicators here, and the main purpose of Alpha is to simply allow you to trade more markets at the same time. It is not a set it and forget it and walk away. You still do definitely need to manage your trades, but we teach you how to set up your ATM on NinjaTrader, which is a partner of ours. We definitely will show you how to set up the ATMs, the profit targets, and the stop losses so that you can have as many markets as you want trading at once. All right, guys. Well, thank you very much, and thanks for listening, and have a good night. Good trading.